Where are you watching me from? Ghana, South Africa, Sierra Leone, US, UK, Algeria. Whatever country you're watching me from, let me know in the comment section. All right. So I'm waiting for you. Keep it rolling. Keep it coming. Keep it coming. Keep it coming. All right. I'm watching. I'm waiting for you. I'm waiting for you. Just keep it coming in the comment section. Let me know where you're watching this from. All right. Okay. Great. So I believe you all can. Yeah. All right. I believe you all are ready for tonight's session. Okay. Yeah, we have some fantastic figures rolling up on the screen. All right, I can see IK from Nigeria, Ali from Pakistan. All right. Okay. Ahmed watching from Nigeria. All right, great. So let's dive straight into, the session for today. All right. So for many of you who have been following our session, from the beginning of last month, the beginning of this month, last week we took a trade, right? And I intentionally left the trade because in our last session I told them that the trade was going to be a long-term trade, was going to be a swing trade. All right. So we took this trade same time, same day last week during this session. While we took two trades. While we analyzed the Australian USD and the Euro USD. All right. And, if you've been following my sessions, I do tell you that before you take a trade, you want to ask yourself what is the current market structure. And that would guide your judgment, into what next. All right. So last week we did some basic analysis, okay, into understanding what the market structure is, and that was how we came up with this. And we also identified that the market was was giving what is the name of this chart now? A descending triangle. All right, a descending triangle, and we were able to have a closer view of this market when we went down to the 1 week weekly chart. All right. And from here, we saw that, the previous week before last week, that was the last week of March. All right. The last week of April. Okay. We saw that there was the market closed in a bearish momentum. All right. And the week that followed, okay, when we took the trade, we saw that it was giving some bearish signals. When we checked the daily time frame, there were so many, bearish momentum with, candles with wicks to the upward side. All right. Now we took the trade and we short the market. Okay. And like I said in the last session, you might want to go and watch it again. I said it's going to be a long-term trade. We're going to swing it, right? So I left it, since last week, Thursday when we met, even up till now. And obviously you could see some results. You could say in our Australian USD, we are in profit. This is all right. Can you hear me? Please, can you hotspot me? All right. Sorry for the short, technical issues. Okay, so we shot the market, and obviously you can see that we are in profit on both trades from the Australian USD trade and also the Euro USD trade. All right. Now, so a quick one. We're going to do something. We're going to take some other. So I've basically, this was to show you, that the analysis we took and that we are in profit already. Okay. So I'm going to close these trades now. Wait, let me see if we've gotten to the level we targeted. All right. So it's basically for the purpose of learning. So all right. So I'm just gonna close these trades here. All right. Close this here. All right. I'm also gonna close. All right. I'm just going to close these as well. All right. So now let's take a fresh trade. Okay. Now let's look at the USD JPY. The USD JPY. All right. Now, from my last session, if you've been following our sessions, I tell you to start with the larger time frame. All right. And before you pick a trade, you are asking yourself some basic question. All right. So question number one, when you want to pick a trade, is what is the current market structure? All right. You are asking yourself, what is the current market structure? So the current market structure would help you understand where the price level is at present. All right. And where the price level is most likely going to go. Okay. So looking at the monthly time frame, because we are giving it a top-down approach. All right. Looking at the monthly time frame, we can see that the market has been in a sustained downtrend. All right. So you draw your line to map out those. You can see that sustained downtrend. Okay. With some minor downtrend here as well. So okay, let's do this. I'm coming. I want you guys to see something clearly here. Now you could see the. Okay, good. Now let me just. Okay, I'm gonna do something different here. Yeah. So I will start from the beginning. So there were so much lines, and I don't want the chart to look so rough. All right. So now, so you can see that this indicates a downtrend, mapping out those edges. All right. Those edges, this downtrend. Okay. Now, we understand that the market has been in a consistent downtrend on the monthly time frame. The next question I asked that you should ask yourself is where is the current price level? All right, the current price level. So you look at this, the current price level is here. Okay, now you look at where the current price level is, and you map out the lowest point at which the price has gotten to consistently over time. So this level is the demand zone. So why did we call it the demand zone? Because it is the zone at which when price gets to it, right, more demand is made for the yen. All right. When price gets to this resistance level, more demand is made for the dollar. When price comes down to this level, more demand is made for the dollar. When price goes up, more demand is made for the yen. All right. And that is how the demand and supply works. All right. So this part, all right, this support level is what we call the demand zone. while the resistance level is what we call the support, the supply zone. All right, the supply zone is the zone via which sellers are willing to sell off, their bags of whatever currency they are holding. But in this case, it is the yen. All right, so when they are selling here, they are selling off the dollar in exchange for the yen. When price is going up, which means they are selling off the yen in exchange for the dollar. All right, so here now we are able to understand three things here. Number one, we are using the higher time frame, the highest time frame, monthly time frame. Number two, the market structure is in a downtrend. All right. Number three, price levels have been identified. Okay. Now let's zoom in closer to see what price is doing at this region. All right. Now you could see that at this region, there are so much bullish momentum at this region. Of course, looking at these bullish candles breaking out of this resistance level, I identify this place as though a minor resistance level, but quite significant to look at. All right, quite significant to look at. So you could see that. Now it's quite significant to look at. Look at the resistance. How it created the resistance level here, how it created another resistance level here. All right. Now, don't forget. So there's a trick to this. The more the price level keeps touching, the more price keeps touching a particular level, right? The weaker the level becomes. Okay. The more price keeps touching a particular level, the weaker that level becomes. So it helps you to be able to predict, right, the outcome, all right, of your analysis of the market when price keeps touching a particular level consistently. So we could see here that price has touched this level in this place, was resisted, and it came again to retest that level, was resisted, and finally there was a breakout candle here. All right. Now this is the breakout candle. This candle here is the breakout candle, breaking out of this resistance level. And when the final breakout had occurred, all right, which was April. Yep, because we are in the month of May now. All right. So April, we had a breakout candle, all right, on the monthly time frame. So right now, of course, the market would always retest to try to check if the resistance level is still solid or not, and that leads to a fake breakout. But in this instance here, there is a pullback, a bit of pullback, which we are going to see more obviously on the lower time frame. So let's go lower to the weekly time frame. Now we can see what is happening here, that market has gone up and at this point was a resistance level. Okay. Now from here, okay, good. From here, all right, we can see obviously that the market is reacting at this level, all right, this supply zone, which is where this price is currently. Now the price had escaped this first resistance level and there was a breakout candle in which we saw on the monthly time frame. Okay, now it's at another level of resistance again. So when you zoom in, you see price reacting at this level. Now, but the interesting thing is this: the breakout candle and a pullback, which is this. Now, whatever will make this price to break out of this resistance line, it's a buy. All right, it's a buy. Whatever will make price to break out of this line here, it's a buy. All right. Now, let's look at what is happening on the daily time frame. Let's look at what is happening on the daily time frame. Now, okay, good. Now, obviously, we see what's happening on the daily time frame here. Okay, good. So now, there is an extension here, and we can see that price broke out of this level, all right, and came to retest that same level again. Okay, for me, with what the daily time frame is saying, this is a buy. All right, this is a buy because price had broke out of this level and came back to retest this same level. All right, now there is a bigger possibility that this market, this price would keep going up. Okay, now let's see if there are more reasons why we should buy this market. All right, now let's see if there are more reasons why we should buy this market. Let's go to the lower time frame. Good. Now this is the 1 hour chart. Okay, let's try the 4 hours before we go to the 1 hour. Good. Now this is the 4 hours chart, 4 hours time frame. You could see basically that there is a pin bar was actually formed before this current new candle opened. All right, which means this region has become a resistance turned support. This region has become a resistance turned support. This region here has become a resistance turned support. All right, and what do you want to do at a level, where resistance has turned support? You want to buy. All right, you want to buy at a level where resistance has now turned what? Support. Okay, now let's go lower to the 1 hour time frame. Now, good. So on the 1 hour time frame, we are now seeing more clearer illustrations, more clearer reasons why we should wait. All right, so for me now, instead of buying at the market price, I would love to buy at this level. All right, I would love to buy at this level. Can you see the level? This level. Okay, now buying at this level avails me the opportunity to scale up to take profit here. All right, why I would put my stop loss here. Yeah. Okay, that's on the 1 hour time frame. All right, so because I'm interested in taking a buy here, but not at the immediate price level, I'm going to set a buy order. All right, so a buy order is an order that is an order that a trader gives to the broker, okay, to buy a commodity or a currency or a security at a level above the current market price. All right, at a level above the current market price. Why? Because you are not absolutely convinced that the market would rise immediately from that current price, but you would prefer to buy at a price that makes you more safer. And that is what I want to do now. That is what we want to do now. So let's go for a buy stop. Set a buy stop. All right. Now our buy stop would be here, would come here. All right. Now let's set a stop loss and a take profit. Don't forget, I told you that don't take a trade without identifying your take profit level and your stop loss. Your exit strategy, your entry strategy must be intact. All right. Now, stop loss 128.007. All right. Then our take profit would be 131.088. Then I place modify to modify the trade. All right. The trade has been modified. Okay. And here we could see that we have a buy stop already set, a stop loss already set. So if this trade goes against us, we would lose $7. If this trade goes in our favor, we would make $16. So that is let's say 2:1. All right, 2:1. So but in this case we are winning more than we are potentially losing. All right, so it's a good one. So here would set a buy stop order. It is the buy stop order that will guide us on the decision to take. All right, now let's look at another market, another chart. Okay, good. Let's look at the dollar Swiss franc. All right, like our tradition should be, you go to the higher time frame. That's the monthly time frame. Oops, look at what just happened here. All right, now I think one of our sessions I explained why this would actually be a buy order. Okay, so we could see that the market initially had given us an ascending triangle here, and the month of this month is May. Okay, the month of April actually closed in a bullish momentum, and not just a bullish momentum. The month of May was a breakout for USD CHF at the resistance region. All right, now this breakout is significant, and as you can see that the bullish momentum continued to the upside. All right, the bullish momentum continued to the upside. All right, so at this point now, the market has moved. We cannot jump into this market. All right, we cannot jump into this market, right? Because it has moved already. Okay, the interesting thing that you need to know as a trader is that it is not about how many trades you get into. It is not about how many trades you take. All right, it is not about the number of your trades. Okay, it is about the timing. So right now we will just accept that this market has gone. All right, from the look of things, from the monthly time frame. Okay, now if we go check it out, on the daily time frame, you see, this is it. That's actually gone. So if you buy here now, you are at risk. All right, you are at risk. The only thing you can do that would actually make sense and make money for you is to wait for the market to get here, and then let me teach you what I'm going to do here. So and then at this level you place a sell order. So now let's place a sell limit here. All right, so a sell limit is different from a sell order. A sell limit is the order that a trader gives to his broker, all right, to sell at a price above the current market price. So you don't want to sell at the immediate market price because you're not confident of the price going down at that current market price. However, you are more convinced, you have a high probability certainty that once the market hits this supply zone, then it will drop. All right. So what do we want to do, and how do we want to position ourselves to that effect? We are going to set a sell limit. So let's do that now. All right. Are you with me? Okay. I wanted us to set a sell limit here. Yep. One click trade. Sorry. Yeah. So we use our sell limit. All right. So at what price do we want to sell? At 1.02581. And then our stop loss should be here. I'm coming. I wanted us to move our stop loss, have our stop loss here. We are doing no, our stop loss will have to be up, but then our take profit can be here. All right, our take profit will be here. So our take profit would be 0.97597. Okay. Our stop loss can be 100 pips away from our entry level. Let's see what that is. 1.02681. All right. Modify. Okay, good. So look at what we have here. Let's look at what we have here. Oops. All right. I was going to. So if it touches our take profit now, if the price goes up, all right, and literally comes down here, then we're going to close profit of 4,984 pips, which is $51. However, if the trade goes against us, then we would okay. Yeah, I have to go lower again so I can see. Okay. All right. I can't see my stop loss. I guess the stop loss was so close to the. It's fine. Let's see if I can see. I can't see the stop loss. Okay. Let me make the stop loss visible so I can pick it up. Okay. Let me make the stop loss visible so we pick it up ourselves, and yep, 3000. Okay, oh, good. Oh, so good. Okay, let's take our stop loss a bit higher then. Our stop loss should go higher. Okay, our stop loss should go higher. Yeah, good. So if the trade goes against us, we'll be losing $29. If it goes in our favor, we'll be having $51. So today you have been able to understand what how to use a pending order, the sell limit order, the buy stop, the buy limit order. All right. Currently now, If you have any question, kindly ask your question. This is an opportunity for you to ask your question. All right. You have the opportunity to ask your question now. Do well to ask your question. I will be answering your question in the next few minutes. All right. Use the comment section. What your question from the analysis we've done, from the live trading, from the live trades we've been doing, and what we did today. Now ask your question. Okay. I look forward to an engaging session, guys. Ask your question in the comment section. How to trade using smart money concepts. All right. I don't know what you mean by smart money. But then if you are going to actually make smart money moves, then you have to be patient, which is, from my own perspective of smart money concept, smart money would actually wait for price to get to a level where there are 80% chances of the market going in a certain direction, and then that is the moment smart money wants to come in. All right. So smart money don't want to buy at this current price. All right. Smart money want to wait for price to get here. All right. Before selling off. Now look at what smart money did here. Smart money would not want to buy at any of this level where the market is choppy, but smart money will want to buy here where the market moves up. All right. Okay, so how do you determine resistance level? Excellent. So like I said in our previous trade, like this, okay, we are able to determine the resistance and support level by the level at which price has consistently created a footprint up and below. Now look at this. This level here where my arrow is, all right, is a resistance level. And why is it? You can see that price had created a footprint here, which means it tried to break out of this level but could not break out of this level and was rejected. So that level becomes resistance because that level was able to resist price movement. Okay, same thing happened to this place. So confirming this level as a resistance level. Now you look at price trying to come down below this place. So this level is a support level because it's preventing price from falling further. All right, that is how you are able to identify it. Okay, the others that we have. All right, now look at this. So I'm gonna, if we choose pending order, you will see. Look at this. So we have buy limit order, we have sell limit order, we have buy stop order, we have sell stop order, we have buy stop limit, we have sell stop limit. So you can play around them, to get the understanding. That's using a demo account. You back test it, to get a full understanding of how to use them and the likes like that. Okay. All right. Someone said, what is the risk to reward ratio you take for your trade and how much do you risk in percent? Okay, great. Now, the risk to reward ratio, the standard risk to reward ratio I use is 2:1. 2 ratio for reward and 1 for risk, right? So I'm risking 1 to make 2. Okay? Now, when you are trading, you need to understand how much of your money you are willing to lose. So when you have $1,000 account, do make sure that you are not risking more than 1 to 2% of that account. All right, risking more than 1 to 2% of that account is too much because you would blow up that account anytime soon. But risking 1%, 2% is okay. It's sufficient. All right, it's sufficient enough. Is sufficient enough. Yeah, someone say, what is the difference between a sell limit and a sell stop? Now, a sell limit, look at this now. If I come here, look at what we did here. Let me go back to this place. What we did here, all right, which means we we put our sell limit here. Now look at where the current price is. Look at where we put our sell limit, which means we are willing to sell above the current price. That is why we set the sell limit. All right. So sell limit is when you, the trader, you are willing to sell, but not at the current price, but a price above the current price. That's why you use sell limit. But sell order, all right, sell stop is when you are willing to sell below the current price. So if I want to sell below at this place where my arrow key is, I will set a sell stop order. All right, that is the difference. All right, good. Yeah, so if you are trading with laptop or your phone, whichever one is good. All right, so it depends on you. If you want to see a wider screen, you might want to use your laptop. If you are good with your phone, then it's fine. Yeah, great. All right, so thank you very much for tonight. I really appreciate you for paying attention and for the lots of questions. It's important for you not to just allow this session to go without you coming back to watch the the recorded session. All right, because we are doing this for you, and we want you to put it. We are putting it up on YouTube so that you can come back and have a good time to watch. And then practicalize what you are learning. All right. Don't forget to follow our YouTube channel. Subscribe to our YouTube channel. We are providing you with quality content and quality sessions so that you can understand what the how the forex market works and also how to take live trades. I look forward to seeing you next week and then having you to share some of your great experience with practicalizing what you've learned. Thank you very much.